All right, the books are officially closed on 2025, and let's be honest, the numbers are way weirder than anyone predicted. The final price for Bitcoin, not the moonshot the bulls were promising. The housing market's final grade, a complete head scratcher. And the stock market, it was driven by quiet structural trends almost nobody was talking about. In this video, we're not just going to hit you with the shocking final numbers for 2025. We're going to pull back the curtain on the silent, under the radar trends that made it all happen and what it all means for your money heading into 2026. Let's kick things off with a big one. Bitcoin. After a year of soaring enthusiasm with prices peaking over $126,000 in October, Bitcoin is closing out 2025 in a consolidation phase. Prices are hovering around the $88,000 mark, a pretty hefty slide from its highs and representing a loss of about 6% for the year. This left a lot of speculators who bought at the top wondering what happened. It seems the rocket ship ran out of fuel, at least for now. Then you have the housing market, which just refused to follow the script. Everyone was braced for a crash, but it never came. Despite affordability being a massive issue, the median US home price actually crept up. Depending on who you ask, year-over-year prices either stayed flat with a tiny 0.2% increase or rose by 1.7%. Zillow's updated forecast even projects US home prices to rise another 2% between November 2025 and November 2026. How do prices keep inching upward when so few can afford to buy? It's the paradox that defined 2025. And finally, the stock market. After the roller coaster of the last few years, 2025 was the year of the slow grind. The S&P 500 and the Nasdaq posted modest gains, but it wasn't the thrilling boom some had hoped for. The S&P 500 is ending the year with a total return of about 18.7%, while the Nasdaq Composite was up over 22%. It was a year that rewarded patience over panic and reaction. The real question is, why? The bizarre numbers of 2025 weren't just random chaos. They were the result of powerful, quiet trends working behind the scenes. First up was a slow, quiet adjustment as Bitcoin traded more like a macro-sensitive risk asset than a narrative-driven one. After years of pure hype, 2025 was the year Bitcoin's story changed from retail mania to institutional strategy. What we saw was a healthy consolidation as the market cooled off from its high growth phase into a more mature, stable state. This wasn't a crash, it was a cool down. Bitcoin is in the big leagues now, and it's being treated like one. Short-term speculation faded, leaving a market driven more by positioning and longer-term holders. The second silent trend was the unbreakable housing gridlock. And the crash everyone predicted was a no-show for one main reason. There just weren't enough houses for sale. Homeowners who locked in super low mortgage rates years ago had absolutely no reason to sell, which created a huge inventory shortage. Yes, active inventory rose over 16% year over year, but that was from historically depressed levels. This lock-in effect meant that even with fewer buyers, the small number of available homes still fetched high prices, causing the market to grind up instead of collapsing. Housing didn't crash, but it also didn't clear. The third and maybe most important trend was the return of boring stability. While everyone was scanning the horizon for the next big crisis, the real story of 2025 was the crisis that didn't happen. The core plumbing of the financial system just worked. There was no major drama. This underlying stability, along with cooling inflation and the Federal Reserve signaling a gradual shift in policy, took the panic out of the stock market. It let companies get back to business, leading to the steady, if unspectacular, earnings growth that propped up the market all year. 2025 taught us that sometimes no news really is good news. So, what do these quiet trends signal for the year ahead? For Bitcoin, the big question is whether this consolidation is the launch pad for the next major move. The thing to watch for is real-world adoption and utility, not just speculative chatter. For housing, the standoff between low supply and high prices will likely continue. For that to change, we'd need to see a massive shift in interest rates or a huge surge in new home construction. And neither of those happens overnight. For stocks, 2026 might be the year where fundamentals truly matter more than momentum. With the market not running on stimulus anymore, investors will probably have to focus more on individual companies with solid balance sheets and actual earnings. The days of just buying an index and watching it fly might be on pause. The biggest lesson from 2025 is this: while the crowd was distracted by the loud, flashy headlines, the forces that were actually moving the markets were quiet, structural, and frankly, a little boring. So, what do you think was the weirdest market outcome of 2025? The Bitcoin slide, the stubborn housing market, or the stock market's slow and steady grind? Drop your thoughts in the comments below. And if you want to stay ahead of the quiet trends that will actually shape your finances in 2026, make sure you subscribe and hit that notification bell. 2025 was a year of adjustment. It was a year where the market's deep structure mattered more than the daily news drama. Bitcoin took a breather, housing refused to crack, and stocks pushed higher simply because the system held firm. It was a powerful reminder that the most important story isn't always the loudest one. Here's to finding those hidden stories and the hidden opportunities in 2026. Happy New Year.